First-time homebuyer advice and first-time homebuyer tips. Okay, I'm going to talk to you today about the total monthly payment, because what happens a lot is people are hyper-focused on, well, what's the rate? What's my principal and interest? And there's often in parts of the country where I'm looking at the total payment, and that's actually not the biggest part of the payment. Yeah, seriously, the mortgage is not the biggest part of the payment. So I'm going to talk to you about what can go into your monthly payment and what, as a first-time home buyer or even a second-time home buyer, you guys want to start considering. Okay, so principal and interest, yes, you have that as part of your monthly payment. That is your mortgage payment. Now, there are interest-only loans as well. However, personally, not the biggest fan of those. I think, aiming towards paying down the house is always a really good thing. It is, in fact, the American dream to own the house you live in when you're retired so that you have lower cost of living. So let's just say principal and interest is one component. Now, the next component that's on every mortgage, right, that no one ever puts enough weight on is home insurance. I'm not kidding, guys. Like, home insurance can be a deal killer. It can be a total deal killer. People will sit there for, well, in this market, hours deciding if they want to buy a house. Oh, well, I think the mortgage payment's too low. What if I do this rate? What if I do this? And I'm like, excuse me, mortgage payment's too high. What if I do all these things? And it's like, did you guys get a homeowner's insurance quote yet? And all the time I hear, nope, 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 no. So if you guys are really serious about a house, get a homeowner's insurance quote. There's so many online companies now where you can literally get a quote in 5 minutes, because as a lender, I can tell you, all across the country, certain areas, it's like $50, $60, maybe $70 a month. Other parts of the area, it's like $300, $400 a month. This would all be on a $200,000 house, guys. Like, I've seen insurances on $200,000 houses that are $1,000 a month. Now look, is that in a flood and fire zone? Yes, but at the same point, this can vary dramatically. In Florida, we see the age of the roof comes into play. We see electrical systems come into play with older homes across the country. Hurricane Alley, there's all these different things that go into making your homeowner's insurance, so that literally you might look at that quote, that may be what tips your payment, okay? Homeowner's insurance, I tell every single client, once they're in contract, you have to get me that quote within 3 days. The reason I do that is because early in my career, what I would see is people would wait towards the end, and then we'd get the, oh my God, my homeowner's insurance is twice as much. What am I gonna do? And it's like, well, you can shop the rate for homeowner's insurance, but generally, if it's expensive, it's for a reason, and you're not gonna see a lot of other providers come in a lot cheaper. Okay, fire's different, but the stuff I see in California for fire insurance, it's not uncommon for it to be $1,000 a month in certain areas, and as you guys get into higher price points, 500, 600, million, what's the square footage, right? Square footage goes into insurance costs. There's so many factors, and people are like, well, Zillow estimated it at, no, get an insurance company to estimate out that quote, and make sure you're comfortable with the quote. So that's very important. Okay, what else? Property taxes. Property taxes, we've had so many people from California moving to Texas. And the first thing I always say is, look, that's great, Texas is wonderful. Have you looked at the property taxes? Because the property taxes in Texas can be 2 to 3 times as expensive as they are in California. So sometimes people will look in different parts of the country and they'll be like, oh my God, the houses are so much less expensive there. I can get such a big house for my money. Whoa, you better check those property taxes first, because there's pockets throughout the country where the property taxes, oh my God, I was looking at one where it was literally 5 to 6%. This wasn't Texas, this was another state. But, Illinois is a great example of a state where you're like, wait, what? And then you're like, wait, that's high. What, so you really want to know, okay, what should I expect with property taxes? Also, if you guys are looking at newer developments, those will often have taxes that are more expensive than the rest of the area, because they're paying for new infrastructure. They're paying for those street lights. They're paying for, the new pavement. They're paying for the grass on the street. Whatever the hell they're paying for, you're paying extra for it. So as a lender, when I'm looking at property taxes, I usually go to smartasset.com. It's a great website, it's good, but it's gonna give you the county average. And as a lender, I can tell you there's variances to that. You know, California is another great example because in certain areas there's a special tax called Melrose for these new developments, and it can easily increase your payment $400, $500, $600, $700, $800 a month, depending on the price point in the area. So property taxes are very important to be aware of, and have the conversation with your realtor, you know, hey, like, what should I expect? Now, a really good realtor is gonna have a good idea of what to expect. But of course, you can always talk to your lender. I'll always be looking up the county average and telling you what to look for, as it's very important, because taxes can be one where people go, oh my God, I didn't know the taxes were gonna be that much. And it's surprising what can catch you. You know, there's like portions of LA where there's like an extra tax because of some bond measures that were passed. Lots of things that can come into play. So we covered your principal and interest, we covered homeowners insurance, we covered property taxes. What else? What else? Okay. If you're buying a condo, it's obviously going to have an HOA. So it's really critical when you're talking to your lender, you're telling them that you're looking at condos and you're really paying attention to those monthly HOAs, because that becomes part of your monthly payment. That becomes part of your debt to income. So if I qualify you for, let's say, a $400,000 condo with 300 HOAs, and I'm saying that's as high as you can go, if you find a $400,000 condo with 400 HOAs, we could be dead in the water. Yeah, and people don't think about this. What they'll do is they'll be like, well, the condo's only 200,000, and I'm like, the HOAs are $1,000. Like, do you know how much house you could buy for that? And we do a lot of that math as to how much house could you buy if you flip from the condo. Also with HOAs, they can increase. You know, your taxes, your homeowner's insurance can increase, but HOAs also can increase. So it's important that you're not max qualified at what the current fees are, because it could lead you to a very bad position in a couple of years. So really keep those eyes on the HOAs. Now, we also have HOAs with houses. Not all houses, it depends on where you are in the country, but there's a lot of planned developments. You know, Florida is a great example. Florida, there's so many communities. Some of the HOAs are like $50 a quarter, some are $600 a month with a house, right? And those are going to be the HOAs that have water parks and super cool stuff. But you want to make sure when you guys are looking online, you're paying attention to how much the HOA is, because it's what's going to go into your monthly payment, and it's also what your mortgage lender is going to need. Okay, now the last thing that can go into your payment, I know you're exhausted, I'm tired, can you tell I'm winded? Okay, the last thing that can go into your payment is if you're, let's say you're doing a conventional mortgage or FHA mortgage, you're gonna have mortgage insurance. With conventional, if you're putting down less than 20%, and with FHA, no matter what. So it's really important that you guys are talking to your lender about, okay, what should I expect with mortgage insurance? You know, are there any ways to make it less expensive? With a conventional mortgage, yeah, you can make mortgage insurance less expensive with the more you put down and the higher your credit score. It's really not that bad. With FHA, no, it's set. It's set based on what you put down. So it's really important that you guys recognize, you know, that there's all of this that goes into your payment, and the online estimators are not perfect at estimating it. You know, we don't know, the online calculator isn't always going to take into account an HOA or break it up quarterly. It might, but it may not quote the insurance right, because really with insurance, you need an insurance company quoting it, talking to them about what else you have, what else are you insuring in order to be accurate. Can you get a discount because you guys have cars with them? You know, all of that comes into play. So to wrap up, my first time home buyer advice tip today is really pay attention to all the parts of the mortgage payment. People are hyper focused on that principal and interest, which you should be, but you really need to pay attention to the other stuff, because that's where I see people get surprised, is if they're not paying attention to taxes, if they're not paying attention to insurance or HOAs, that's when all of a sudden in their head they've come up with a payment because of principal and interest, and then they go, whoa, I can't afford this. So I hope this has been helpful. If you guys need to get qualified, I'm licensed in 48 states. Hit the link to apply. If you have questions or comments, as always, leave them. I will do my best to get back with you. Thank you for watching.